Okay, 7-2 is on preparing a balance sheet for a business that is organized as a sole proprietorship. So if you remember, we did income statements yesterday. Today is our other financial statement called a balance sheet. And a balance sheet reports financial information on a specific date. Specific date, which means there is no for the month ended. It's just what the date is. So we just would put like May 30th or June 30th or May 31st or whatever it happens to be, whatever the last day of the month or the year is. And so what a balance sheet actually shows is what our financial position is as a business. So that really shows our financial strength. So anytime that our assets are greater than our liabilities, that means that we're financially strong. And if our assets are less than our liabilities, it's financially weak, meaning that our businesses could fail. Now, maybe some of you in the back of your mind are thinking, well, aren't assets supposed to equal liabilities? No, remember that assets equals liabilities plus owner's equity. So we haven't quite factored owner's equity in right here. All we're looking at is whether our assets are greater than our liabilities and what that shows us in terms of financial strength. Now, the information needed to prepare our balance sheet is coming from two places on our worksheet. Again, it's coming from our account titles. So we need to know which accounts are part of our balance sheet as shown here. And then also making sure that we're on the balance sheet columns. We don't want to take from the trial balance. That would technically be hidden kind of in here. They don't show that. So we want to make sure we're getting the balance sheet so that our supplies and our prepaid insurance are up to date because of those adjustments. So that's where our information is coming from. Now our balance sheet has 4 sections, very similar to the income statement, except that our 4 sections for our balance sheet are our heading, then we have assets, liabilities, and owner's equity. So our heading again, remember I said that it's the name of the company, what our financial statement is on the second line, and then the third line, remember, is just the date, making sure that there are no additional words here. This isn't for the month ended, it's just a snapshot, so it's on a specific date. Okay, so remember that our balance sheet reports information based off of our accounting equation. Assets equals liabilities plus owner's equity. So because assets are on the left side of the equation, the assets section is on the left side of the balance sheet. Same thing with our equities and liabilities. They're reported on the right side of the equation, so they're going to appear on the right side of the balance sheet. So assets are on the left, liabilities and owner's equity are on the right. So this is an example of our balance sheet. We put assets, making sure that assets, this heading here, now remember, Applia is going to fill this all in for you, but when you do your workbook, you're going to have to put this together by yourself. So assets is the heading, it gets centered in between this column, and then we list all of our assets along with their amounts here. Then we do the same thing for our liabilities. We put our heading here centered in the middle. We list our liabilities that we have, and then we also list the amounts. Now notice that under liabilities, we do a total, and we do a single line here to indicate that we are going to total those liabilities. Then we also need to add what's called our current capital. Now this is very important, and a lot of you are going to probably screw this up, so it's important that you pay attention here. Only the amount of current capital is reported on the balance sheet. So that amount is needed. We need to look for a couple of different places. So if we have a net income, we take our capital amount that's on the worksheet, we add our net income, and we subtract out our drawing. That's our current capital. If for some reason we have a net loss, we take our capital amount minus our net loss minus our drawing, and that gives us our current capital. This is very important. If you don't do this, your assets are not going to equal your liabilities and owner's equity, and you'll be confused as to why things don't equal. This is why. You didn't use your current capital amount. So this is what I'm talking about, is that owner's equity is given here, and it's the current capital. This is the amount plus net income minus drawing. And you can see that when we use this, that means that our total assets are going to equal our total liabilities and stockholders' equity. Or owner's equity, excuse me. And if you don't, then we're going to have an issue. So you have to make sure that you use your current capital. Also notice that once you have your totals and you equal, that they are double ruled because our debits do equal our credits. Now, if for some reason we wanted to report this in detail or Applia asks you or something else, this is essentially what we're doing. If we had looked at our worksheet, it says that we had $2,000 for a capital account. Our net income was $31.62, and then this is our drawing. So if we take our net income and take out our drawing, because remember, drawing is when you're paying yourself, obviously that's coming out of net income, you get a difference of 2012. When you add those two together, that's your current capital amount. And that's what allows us to have our total liabilities and owner's equity equal our assets. So that's what all those lines are for. And now what we're going to do is head over and do our 7-2 work together in Applia, and I'll meet you over there.